Welcome everyone to our webinar on Franchise Disclosure Essentials. My name is Corinne Whelan and I'm the practice group leader of the franchising team. And my co-host is Joe Harman. He is a lawyer in our franchising team as well.
Hi, everyone.
Now, before we begin, just a couple of quick housekeeping items. You will receive a recording and the slides in your email after the conclusion of this webinar. Feel free to submit your questions in the Q&A box and we'll answer them all at the end. And please complete the feedback survey after the conclusion of the webinar. For the next 48 hours, you will be eligible for a free consultation with LegalVision to discuss how we can help your business. If you provide your contact details in the survey at the end of this webinar, we'll reach out to you and organise that complimentary session. So today we will be discussing all things disclosure document update essentials. That's going to include a quick recap of what's required under the code, the key sections that need to be updated, what your financial disclosure obligations are, some information on marketing fund obligations. We'll talk through some other relevant sections that are often forgotten about. We'll talk about the ongoing disclosure obligations, and then we'll be ending with a little bit of a Q&A. So to start, I'll be talking you through a quick recap of your annual disclosure obligations. As most of you should be aware, as a franchisor, your disclosure document must be updated by 31 October each year. That is unless you have entered into no more than one franchise agreement in the prior financial year, and if you do not intend to enter into another franchise agreement in the following financial year. In those circumstances, then you do not need to update your disclosure document. However, if a franchisee does request an updated disclosure document, you will be required to still proceed with that update. Updated information in the disclosure document must be current as at 30 June of that year, i.e. the end of the most recent financial year. If you are a franchisor that runs to a different financial year, say maybe a New Zealand or an American financial year based on your master franchise relationship, then it should be done by that financial year. And keep in mind that it does not need to contain information that occurred after that end of financial year, i.e. the 30 June in Australia. Some sections of the disclosure document require disclosure to be made at the time for a specific franchisee, and we'll go through those sections in a little bit more detail later on. Most sections are generic and must be updated by 31 October. Some sections will be specific and will capture the last 3 financial years, and other sections, like litigation, will actually capture information on your network over the last 10 years. We'll talk you through these. The disclosure document, franchise agreement, key facts sheet, and other ancillary documents must be provided to a new franchisee at least 14 days before they can sign the franchise agreement or pay a non-refundable amount to the franchisor. If you do not comply with this, there are penalties under the Franchising Code of Conduct. This amounts to 600 penalty units or over $180,000 in fines per occurrence of breach. Franchisors must also update their details on the franchise disclosure register by 14 November each year. So once you've undertaken your annual disclosure document update, you've updated that document, be aware that you do need to go onto the disclosure register and update and add in those sections for yourself as a franchisor. Also, remember that you must update your key facts sheet at the same time as your disclosure document and have that also done by the 31 October deadline. Joseph's now going to talk us through some key sections that need to be updated during your disclosure document update period.
Thanks, Corinne. So when updating your disclosure document, the first place to start is to ensure that all of your own business details are correct and up to date. So for example, if your business has changed its address in the previous financial year, the disclosure document will need to be amended accordingly. As a franchisor, you will also need to ensure that you are disclosing all of your associates, who can either be corporations or individuals. So when deciding whether or not you need to disclose a potential associate, the key question to ask yourself is, does that person or entity have a relevant connection to the franchise system? For example, if you have an IP holding company or a related entity who supplies goods to franchisees, then these entities would need to be included in the disclosure document. However, if you were, for example, to be a director of another company, which is wholly unconnected to the franchise, then this entity would not need to be included as an associate. Likewise, if any new directors or officers have begun working in the franchise system in the previous year, they will need to be added to the disclosure document. And it's important here to remember that officers doesn't only include directors. So for example, if you've hired a new general manager or a new CEO or someone who's really heavily involved in the key decision-making of the franchise, then they will need to be disclosed as an officer here. So the disclosure document also requires you to include the details of any litigation that you or your associates have been a party to in the previous financial year. Now, hopefully there won't be a need for any of you to update this particular section of the disclosure document, but if there have been any criminal or civil proceedings involving either yourself or an associate, or which are just relevant to the franchise system in general, then you will need to update the disclosure document to include the details of these proceedings. For example, where were the proceedings held? Has there been a final outcome yet? And you need to include those details in the disclosure document. Likewise, if you've been involved in any mediation or alternative dispute resolution proceedings with any of your franchisees in the previous financial year, the details of these proceedings also need to be included in the disclosure document. Finally, if you have begun paying any sales agents or recruiters to recruit potential franchisees on your behalf, then you will need to state this in the disclosure document as well. Okay, so the next stage of updating your disclosure document is to update the details regarding your franchisees and your franchise network as a whole. In particular, if any new franchises have been granted in the previous financial year, then you'll need to add the details of these franchises and their respective franchisees to the disclosure document. This includes the franchisee's individual contact details as well. Although if the franchisee operates its business from its home address, then please be sure that you're not including that address in the disclosure document, as you're actually not allowed to include a franchisee's residential address here. So please note, as Corinne mentioned earlier, your updated disclosure document needs only to be current as of the 30th of June. So if you have granted any franchises subsequently from this point, then the details of these franchises actually don't need to be included in the disclosure document for this particular update. Now, we would say that this can often be one of the more time-consuming parts of the disclosure document update process. So to help you guys speed this process up and to make it more efficient, we really recommend keeping either an up-to-date spreadsheet or a list of your franchisees so that when it is time to update the disclosure document, you have all the necessary information readily available. Now, just as you need to update the disclosure document to add any new franchises, if any of your existing franchises have stopped operating in the previous financial year, then the details of these franchises will need to be included in the disclosure document. Please note that you also need to include the details of why they actually stopped operating. For example, if they sold their business to a new franchisee, if you terminated the franchise agreement because of their failure to rectify a breach, whether the franchise agreement was ended and for whatever reason was not renewed or extended for an additional term, or if you bought back the franchise from one of the franchisees. Finally, if you operate as a master franchisee and there have been any changes to the master franchise relationship, such as the master franchisor transferring its business to an incoming third party, then the disclosure document will need to be updated to take into account the changes in this master franchise relationship. So next up, as a franchisor, your intellectual property is obviously the foundation of your business, and the disclosure document reflects this. As such, if there have been any changes in the intellectual property of your franchise system in the previous financial year, then these changes will need to be set out in the disclosure document. Now, some examples of these changes could include the creation of any new IP. For example, if you're a restaurant or a hospitality service business and you've created a new menu, new recipe, then these are the kind of things that could be included here. Likewise, it's also really important that you set out any registrations of intellectual property. And in particular here, we are most commonly referring to trademarks. And it's important that you also note that when you're adding the details of any trademarks to the disclosure document, it's not just if these trademarks have been formally registered, If you have applied for a trademark and it has not yet been registered, then the details of this application will also need to be included in the disclosure document. Finally, if you have begun using any new websites or domain names as part of your franchise network, then you should add these details to the disclosure document as well. So next up, you also need to include relevant details of how your franchisee is actually able to use the IP. So now most franchisees will be provided with a non-exclusive license to use a franchisor's intellectual property, and they won't actually obtain any ownership rights over the intellectual property. However, if for whatever reason in the previous financial year there's been a change in this arrangement, there might be a specific piece of intellectual property which franchisees are allowed to have ownership rights over, for example, you would need to make sure that this change is clearly set out in the disclosure document so that franchisees are fully aware of their rights and obligations in respect of your intellectual property. Likewise, if there have been any threats to the intellectual property, for example, if there have been any judgments or proceedings which could affect the ownership of or use of this intellectual property, then this will need to be reflected in the disclosure document. Now, finally, if there have been any changes in the actual ownership of the intellectual property, for example, you may have set up a new IP holding company in the previous financial year, and you may have then assigned the ownership of the intellectual property to this IP holding company. Then the disclosure document needs to be updated to include the details of this IP holding company and to make it clear that the ownership of the intellectual property has changed in the previous financial year. So the next part of the annual disclosure update then focuses on whether there have been actually any changes to the more operational side of your franchise network. For example, you may previously have provided franchisees with a non-exclusive territory in which multiple other franchisees could compete in the same area. However, in the previous financial year, you may then have decided to move to an exclusive territory model in which each franchisee is provided with its own specific area in which they have the exclusive rights to operate. Now, if this change has occurred, this is the sort of thing that you'd want to make clear in the disclosure document so that franchisees aren't misled about whether they'll be provided with exclusive rights over a territory. Likewise, if there have been any changes to the site or territory selection criteria, for example, you may require franchisees to operate from a premises of a certain size, square meters, for example, or you may there may be changes to the demographics that you're looking for in franchisees' territories. For example, you may want them to only operate in a territory which has a certain population size. Then these are the sort of details which you would be looking to include here in the site or territory selection criteria. So next up then, if there have been any changes in how your franchisees are actually able to sell their goods and services, then you'll need to update this information in the disclosure document. In particular, you should really consider whether your franchisee's rights to sell any goods and services online have changed. For example, if goods and services can now be sold through third-party websites, if you're a hospitality service, for example, who's recently started using Uber Eats or Menulog or DoorDash, then you'll need to include those details in the disclosure document. And you'll also need to include either the domain or the URL of the third-party website which franchisees can use. So Corinne will now run you through your key financial disclosure obligations and also your obligations if you operate a marketing fund.
Thanks, Joe. Look, financial disclosure is a really big and important one for franchisors. We see majority of disputes coming through in regard to how the franchisee has been sold the business and the types of information around franchisor rebates on the sale of goods are, and the ultimate costs that the franchisees will incur in operating the business. So it's really important to get this information correct. The main way that you need to be updating these relevant sections is you have to provide information in regard to any rebates that you obtain or your associates obtain from the supply of goods or services to the franchise network. If you have an interest in any approved supplier, that also has to be disclosed. Specifically, you must disclose any rebates that are received by you in the previous financial year for the goods or services that have been supplied to the franchise network by third parties. This kind of includes quite a few things, but the disclosure document's really, really explicit on what needs to happen here. You need to give information on the nature of the rebate, the name of the business that's providing the rebate to you, You also have to include information on the total amount of rebates received from each supplier. This is where it gets complicated, expressed as a percentage of the total purchases from that supplier by all franchisees or members of the franchise network. This is quite a technical area to get your head around. It often requires obtaining information from the suppliers on how much they've supplied to your network and then working that out as a percentage of what you've been given back from that supplier as a rebate. So we recommend you work with a lawyer and also speak to your accountant around those figures. In addition, the disclosure document contains what we like to call the section or clause 14 tables. Those tables are a bit of information on all of the expenses and costs that a franchisee will expect to incur when operating a franchise. They're divided in a few different categories, and some expenses may be captured in more than one of those categories. So again, work with a lawyer to help work out how that should look. But it's important that you make sure that you're reviewing whether any of those Section 14, financial disclosure sections have been and expenses have been changed in the last financial year. This is incredibly prevalent at the moment with, supply chain issues, potential changes and increased costs of living, where some things we're seeing the cost of goods and services increase substantially. So you should really be annually reviewing these sections, updating them, making sure that they're genuinely reflective of the actual costs and expenses that a franchisee will expect to incur. So a good example is rent. So if you have several franchisees that are all leasing premises, you should be giving them a range of the rental costs that they may expect to see. You can do an upper and lower limit, but it's really important that those figures are as accurate as possible so franchisees have an understanding of how much operating a business may cost them. You also need to disclose any earnings information. So if you provide earnings information to franchisees, you must provide and update certain sections within your disclosure document, particularly if you've started disclosing earnings information where you may not have previously in the last financial year. As we've mentioned and as Joe kind of alluded to, obviously, where this is a big issue is making sure that it's up to date and making sure that it's reflective of what you're actually doing in the network. Again, we see lots of disputes that happen in relation to the earnings information that franchisees are given, particularly around the potential profitability of the franchise network and the franchise business as a whole. As a franchisor, you also need to provide a statement saying that you are a solvent. So that has to be done every year. And then you have to also provide financial reports for the last 2 years prepared in accordance with the Corporations Act and relevant accounting standards. And then if you like, you can also audit those statements if you're concerned about providing that information to franchisees about the profit and loss and the potential money that the business is making, then most franchisors will go ahead and get those reports audited separately. If you are an entity that has not existed for 2 years, then you simply need to go get an audit of your entity and you do not need to get those financial reports prepared because you won't have 2 years of statements to show. Again, work with a lawyer to find a relevant auditor. That is good for helping you get that information because we do find it's something, a bit of a sticking point that often happens during the annual disclosure document update period, where if your accountant or auditor doesn't know what they're doing, then we can send you in the right direction around what needs to be done. Marketing funds are another area where we see obviously quite a bit of disputes, and we all know that there's been a lot of litigation from the ACCC in relation to this. So keep in mind that every year you do need to update this section of your disclosure document, and you also need to provide relevant reports every year as well. So the information that franchisors should be including in your disclosure document include who contributes to the marketing fund, how much the franchisees need to contribute, who controls the fund, if the fund is audited, who audits it, and what the expenses of the fund can be used for. If you are a franchisor and you're also operating your own businesses or units of a franchise business, you also need to be contributing to the fund and you need to update your disclosure document to explain that that is what you are doing. Franchisors will also need to provide franchisees with a marketing fund report that sets out all of the fund's expenses for the past financial year. That report must be prepared by 31 October and provided to the franchisees within 30 days of that report being prepared, unless the report is audited, which there is also a further obligation. So your report needs to provide what we call sufficient detail so as to give meaningful information to franchisees. That meaningful information needs to be about the fund sources of income. So for example, if you have suppliers that are providing a rebate to the marketing fund, you should be talking about that and mentioning that here. In addition, if all your franchisees are contributing, then you should be saying how much and the details of what the contribution is. You also need to be saying and showing all of the expenses of the fund. So you need to show exactly what marketing expenses were paid for by that marketing fund. This is often something that trips franchisors up because you often will get like a line, one word answer on what that is when you're looking at your reports and you're formulating these reports. But what the code and case law has clearly clarified is that there needs to be sufficient and meaningful information around that. So what we recommend is elaborating on that. We actually undertake audits on your marketing fund and have a look at it and give you a bit of a high level summary on whether we think it's compliant with the obligations set out in the code and case law. Franchisors should also keep thorough records of expenditure throughout the year. The best way to do that is actually by, some people actually just pull up, because it obviously has to be in a separate bank account as well. Some franchisors will actually just pull a report on the bank account and all of the money that's come in and out of it, and then use that to formulate their report for record keeping purposes. And as I alluded to earlier, an audit will need to be done of that marketing fund as well and those expenses, unless 75% of your franchisees agree not to audit the fund. And that kind of auditing or non-auditing, I guess, vote must be done and circulated ASAP. And then if you do have to audit and you do get it audited, then that also has to be provided within 30 days of the reports being prepared. Now Joe's just going to talk about other relevant sections of ongoing disclosure.
Thanks, Corinne. So yeah, we've now run through most of the main segments of the disclosure document that you need to update. However, there are, of course, some other relevant sections which you'll also need to ensure are up to date. So one of these sections concerns whether any franchise agreements have been what's called unilaterally varied in the last 3 financial years, and if there are any circumstances in which you can unilaterally vary your franchise agreements. So what we mean by unilateral variation is a circumstance in which you, as the franchisor, change the terms of the franchise agreement without the franchisee's actual consent. So this is not something that regularly occurs, and it's certainly not something that we would advise you to do. But if there are any circumstances in which this has happened, then you should set those out. And if it actually has happened in the previous financial years, if you have, for example, changed any franchise agreements, whether it be to update a specific fee or other changes of that nature, then those details of that change needs to be set out in the disclosure document. So likewise, you also need to consider the termination rights of each franchisee and whether they've changed in the previous financial year. For example, you may have introduced new premises location criteria, stating that if your franchisee has failed to locate a premises within a certain time period, 3 to 6 months, for example, you can then automatically terminate the agreement. Now, if that wasn't the case in the previous financial year, then you need to update the disclosure document to make it clear that this new termination mechanism has been added to your franchise agreements. Likewise, it's also important to look at the actual terms that apply at the end of a franchise agreement. So, for example, are your franchisees able to renew their franchise agreements for another term? And if they are allowed to, are there certain preconditions that they need to meet beforehand in order to secure the option or right to renew the franchise agreement? Now, if you've added any new conditions in the previous financial year, once again, you'll need to make sure the disclosure document is updated accordingly to reflect these changes. Likewise, some other changes which you would need to consider are if your franchisees are compensated for goodwill upon termination of the franchise agreement. So what we're talking about here is most franchise networks will not compensate their franchisees for goodwill, as the goodwill in a franchise business generally derives from you as a franchisor, from your branding, from your intellectual property, from the systems and processes which have made you a successful business. and which you then pass on to your franchisees. However, there may be circumstances in which a franchisee has potentially, gone above and beyond and has done particular service to the franchise network, and you want to, reward them by providing them some compensation for the goodwill that they've generated in the franchise brand. If there are any circumstances like that, then those need to be set out in the disclosure document. Likewise, as a franchisor, you may also consider whether your franchisees have undertaken any significant capital expenditure throughout the term of their franchise agreement when the actual agreement comes to an end. So if one of your franchisees has, for example, done significant work renovating a premises or something like that, and they've had to expend a significant amount of money in doing so, you may want to consider potentially providing them some level of compensation at the end of the term, or otherwise providing them with a more favorable termination agreement than may be the case for the majority of franchisees. So if this has happened in the previous financial year, or if there are any events or circumstances which may lead you to consider considering a franchisee's capital expenditure when the agreement comes to an end, then once again, this is something that you will need to make sure is included in the disclosure document. So likewise, there are certain sections of the disclosure document which actually need to be updated on an ongoing basis rather than purely on your annual and end of financial year disclosure document update. So Corinne will run you through these shortly, and these actual particular circumstances are all set out in the franchising code. Now, finally, certain franchisors do also like to update the code on a franchise grant basis. So on a case-by-case basis, if there are any particular arrangements that apply with that franchisee, for example, the initial franchise fee is a little different from what you usually charge. Some franchisors may actually go in and update the initial franchise fee in the disclosure document. Now, this is not actually strictly required. Your disclosure document is more of a point-in-time summary document, which kind of summarizes the overall franchise network, and the franchise agreement that you enter into with your specific franchisees will set out the actual specific terms and conditions of that franchise and will then govern the relationship between the two parties. So it's not something you have to do, but sometimes it can be helpful to make sure that franchisees are not confused if they see one fee in a disclosure document and another in a franchise agreement. This can sometimes create a bit of uncertainty or lead them to turn around in a couple of years' time and say, well, I was misled about the price that I would have to pay to join your franchise. So Corinne will now run you through some of those ongoing disclosure obligations, which I mentioned before.
Thank you. So there is a relevant section of the Franchising Code of Conduct under Clause 17 that basically requires you to update your disclosure document more frequently than that annual disclosure document update period that we've been speaking about. More so because they have what we call like their materially relevant facts for the franchisee. So there's actually the specific section that speaks to what these exactly are. And the reason why they're more important is because they could be things that may have a greater impact on, the decision making of a franchisee when they're looking to become a franchisee as part of your network. So they obviously need to be disclosed to the franchisee within a reasonable time. The code actually prescribes that is by no more than 14 days after the event occurring or after the franchisor becoming aware of that relevant change. For example, and the main items that are captured under this are if there are changes in the financial position of the franchisor, such as solvency issues, then this must be provided and explained to the franchisees as soon as the franchisor becomes aware of it. If there are changes in majority ownership or control over the franchisor, these do actually have to be updated within that at least no later than 14-day period. Similarly, if there are proceedings that are commenced by a public agency or a judgment in a criminal or civil proceedings against the franchisor or an associate or director, you do need to update the disclosure document as well. If the franchisor or its associate becomes what we call a Chapter 5 body corporate, which is an area under the Corporations Act, then you do have to make those disclosures as well. And also if there is a change in the intellectual property or the intellectual property ownership or control within the franchise network. What we recommend, because we've seen this happen a few times where changes are made, particularly around ownership structure of the franchisor, or there's some kind of issue, maybe solvency, come to us as lawyers and we can help you work through that and unpack what should be done as soon as possible, because it may be that we're already 14 days into that period that you're meant to have disclosed that to your franchisees, or at least updated your disclosure document. So we need to try and rectify that as soon as possible. Other ongoing disclosure obligations that are specifically particularized for the franchisee include the territory and site history information. So a franchisor must provide particularized information on the history of the site or the territory that is to be franchised, and that information must be provided in relation to the last 10 years of the franchised business. Uh, you must also provide an update on whether you as franchisor or your associate has an interest in the lease that is to be franchised. So that the franchisee is going to be operating from. So it's really, really important to make sure that you do provide that information up to date and particularized for each franchise grant, because obviously we're talking about something that is site specific to the franchisee. So if there has been a high turnover of franchisees in the last 10 years, it's really, really important to let them know that. Similarly, if you have an interest in the lease, the disclosure document must be updated to show that you disclose that you do have an interest in the lease as the head lessor or as a licensor in some capacity. And just a final note on ongoing disclosure that we've already briefly touched on, but we just wanted to touch on it a little bit more. When it comes to those Section 14 tables of the disclosure document and the fees that the franchisees are likely to be charged, just keep in mind that those ongoing costs should be really set out as transparently for franchisees as possible, given we see that there can be a lot of argument over what was disclosed versus what was happening in reality. Bear in mind that you must include a description of the fee, the amount of the fee or the method of calculation, who the recipient of the fee is, when that fee is due and payable, and whether it is refundable. If you as a franchisor intend to or do increase your fees throughout the term of the franchise or throughout, outside of this disclosure document update, if you're planning on updating or introducing new fees, or you're becoming aware of any new expenses that may be incurred, then it may be worth updating these Section 14 tables so that they're giving an accurate snapshot of the franchise business as at the time that that franchise is going to be granted, just so that it is very clear to the franchisee what they can expect. We mainly raise this because failing to disclose fees or misrepresenting the cost to a franchisee can be considered misleading and deceptive conduct under the consumer law. So we'd want to try and avoid that as much as possible. And that actually concludes the main part of our webinar. So you may find our publication, Franchisor Guide to Financial Disclosure, useful, that you can download by scanning the QR code on this slide. You might also be interested in our upcoming event, Employment Law Update for In-House Counsel. I find this is really important. It's something that I would just mention as a franchisor. You are vicariously liable under the Fair Work Act for non-compliance by your franchisees with employment laws. So if you can get to a webinar like that, it would be very, very useful for you to get across what you need to be thinking about. We're going to answer your questions shortly, but while we just get you to submit them, we're just going to take a minute to tell you about LegalVision's membership. By becoming a LegalVision member, your business gets unlimited access to our full team of over 100 specialist lawyers for all your business as usual legal needs. It's like having your own in-house counsel for a fraction of the cost. Our team can assist you with unlimited document drafting and reviewing of business contracts, unlimited legal advice consultations, and unlimited domestic trademark registration and much more, including annual disclosure document updates and everything else that franchisors need to be thinking about. So as a LegalVision member, you won't worry about the cost of lawyers ever again. I think of it as having, us as your in-house legal counsel. We'll take care of all your in-house business as usual legal work, including your annual disclosure document updates, so that you can focus on running your franchise. To learn more about how membership can help you, feel free to request a free consultation when the survey appears at the end of this webinar. All right, now we're going to answer some of your questions that we have had submitted. So there's quite a few, which is amazing. Um, so yeah, quite a few that have come through. So one of the questions is there different types of franchises and where is the best place to find that relevant information? I might just take that question and Joe, you can add in if there's anything you want to jump in on. So yes, there are different types of franchises. It will really depend on how you want to structure the franchise model, as well as, I guess, what type of business you're operating. So, we like to talk about some franchise models as almost like a man in a van situation where franchises won't be premises based, whereas there will also be, retail or premises based franchises. There can also be ones where people operate the franchise from their home. It really depends on what works for your type of business. The best place to find relevant information on, I guess, what the different franchise models are and how they look is you can just Google different questions that you have about models. We have a lot of online access to a lot of content that we put out in relation to this. We have lots of articles that can give you a little bit more information. If you just want to do a peruse of like what's available in, I guess, the market at the moment, now that there's a franchise disclosure register where all franchisors put their information, it's also a really good place to go looking to just see who's out there, what type of franchises exist, what their models are, what people are looking at doing. So, yeah, there's a little bit about different types of franchises, but then some people structure their franchises differently at a corporate level as well. So, yeah, there's a lot of different methods and models there. Is there anything you want to add to that, Joe?
Yeah, I think that's pretty comprehensive, Corinne.
Great. Um, then someone has asked, with regard to marketing funds, when you require the franchisees to vote on whether or not they wish to have an audit conducted, how are non-voters treated? Are they a yes or a no? Um, Joe, did you want to answer that, or would you like me to answer that?
Yeah, I can start off on that one, Corinne. So
Go ahead.
basically what the code says is that you need to have 75% of your franchisees who contribute to the fund have voted to agree that the fund does not need to be audited. So see, there's a potential bit of gray area there, but really what you need is at least 75% of your franchisees who actually provide money to the marketing fund to have voted clearly to say that no marketing fund audit is required. So for the purposes of whether or not a non-vote is a yes or no, I think it'll be more accurate to treat it as a no vote because you really, as essentially what you need to do is to make sure that you have that specific number of people voting in either the affirmative or negative, regardless of whether there's a non-vote. So if you provide your franchisees, for example, saying, do we need a marketing fund audited? And 80% of them vote no, 10% of them vote yes, and 10% of them abstain from voting, then that's enough to say that the audit doesn't need to be conducted because you do have that clear 80% of franchisees having voted no. Likewise, in a kind of reverse situation, if only 60% of your franchisees have voted that no audit is required, but 30% haven't voted at all, then it's not enough to kind of use those non-votes as evidence that the franchisees don't require you to conduct that audit if you don't actually have their clear, evidence of their vote.
Yeah, yeah, agreed. Another question that's come through is, can you change the size of a franchisee's existing territory? And if so, how should this be shown or disclosed in the disclosure document? Does this also need to be shown under the unilateral variation section? Joe, are you comfortable taking that one as well?
Yes, so basically there is actually a specific section of the disclosure document which talks about circumstances in which a franchisee's existing territory can be changed. What we would say is that it's important that if there are any circumstances in which you're able to adjust a franchisee's territory, for example, one might be if they're not performing at the requisite performance standards that you require as a franchisee, and you feel like they need to have a reduced territory, and they're not potentially capable of servicing a territory of a specific size, then there may be a mechanism in the franchise agreement which allows you to change their territory, but it is important that it's actually set out upfront in the franchise agreement. And usually we would, when drafting a term like that, we would make sure that it's compliant with the code and unfair contract term legislation, so that your franchisees are, for example, provided with clear and a reasonable level of written notice before this change comes into effect, and that there is actually an ongoing consultation between the two of you back and forth, that both parties are kind of being transparent with each other about the actual change to the territory. Likewise, you may want to increase the territory of your franchisee if they're doing particularly well and you feel like they have the resources and the capability to take on a larger burden. Once again, it's important that the actual mechanism by which that can occur is set out in the disclosure, in the franchise agreement. Likewise, you would then make sure that those same terms are made clear in the disclosure document, so that the two documents are on the same page and that the franchisee is clearly aware of the circumstance in which the franchise agreement may change. In regards to the unilateral variations part of that question, if you have changed a franchisee's territory in the previous financial year or 3 financial years, and that was done without their consent, or that was done from your end, that you just informed your franchisee that your territory has been reduced, then yes, that is potentially an example of a unilateral variation, which should be included in the disclosure document. Corinne, do you have anything you want to add to that one?
No, that was very comprehensive as well. I'll take the next 2 questions that have come through. So one of you has asked, when talking about potential litigation outcomes, are we only required to disclose what we are aware of? Our business requires a police check to start. Should it be placed in to have those mandatory and yearly? Look, the litigation outcomes are only in regard to you as the franchisor and the people, usually an associate of the franchisor, so one of the directors is usually the biggest one. Ultimately, you don't have to disclose anything beyond that. And you should only really disclose litigation that you are aware of. There, obviously, you can't foreshadow that there could be something preemptively occurring, unless you're employing someone in the business and then that person who's employed as at the franchisor level has or is likely to be, based on your police check, going through criminal proceedings for whatever reason, and they're likely to have a management or decision-making power over the franchisor entity. If that is the case, then that should be disclosed. But beyond that, it's really about the franchisor and the franchisor's litigation history. The more common ones we see, and there's a criteria of what types of proceedings would actually be included. The most common ones that we see would be consumer law issues. So if there has been an issue with a product, a good, a service, something that's been provided by you as a franchisor, or by one of your franchisees in the franchise network, and you as the franchisor have been joined to those proceedings, that would be a relevant bit that you would be adding in, where you have to disclose the information because you're a party to those actual on-foot proceedings. Similarly, some other ones we've seen in the past are in relation to intellectual property. So where there may be some kind of question mark over whether you have rights to use your intellectual property, or someone suing you in relation to a certain mark or the misuse of a mark, then that would be something that would be relevant to the franchise network that we would see captured under here. If you're thinking about police checks to start and you're worried about certain, I guess, managerial people in the business, then certainly maybe undertake those on a yearly or bi-yearly basis. But as part of your employment contracts, you'd be wanting to look into the enforceability of that and just double checking that. And then the next question that we've got is, what are the most common terms franchisors need to be wary of in relation to the new unfair contract terms legislation? Great question. Sounds like one of you's definitely been thinking about this. So there is actually a guidance that the ACCC has put out in relation to what they have, deemed to be unfair contract terms within specifically franchise agreements. So if you do have specific questions about that, feel free to book one of those consultations with us. We can send you that guidance. We can send you a little bit more information about it. But the most common terms that I could speak to that we're seeing a lot within franchise agreements will be those kind of unilateral variation clauses, just a right for a franchisor to impose additional fees, make franchisees undertake significant capital expenditure, reduce the size of somebody's territory, implement a unreasonable or a completely new minimum performance criteria. Those types of unilateral variations are definitely going more down the path of being unfair now, particularly in light of the fact that a franchisee, when entering into a contract today, could not potentially foreshadow how much those changes would impact them or cost them in a year's time if you go to try and make those changes. So it's really important to be transparent with them about that. In our franchise agreements, we've put kind of caveats on when those changes will happen and why that would happen. So just keep that in mind. It's really important to try and be transparent around that and put that into your drafting. Some other ones that I can think of are set-off rights. It's really common in franchise networks where we want to, set off any fees against the fees that we're owed. That we're paid against what we're owed. Just be mindful that there should be like a very specific criteria around those. And then the kind of other main ones we see are a lot of indemnities, liability clauses that are very, very one-sided. We all know as franchisors, obviously there's a big risk in your network when you're giving someone else the right, an obligation to run a business that's a replica of your business. But keep in mind that obviously, even if you're doing that, having a broad kind of coverall, right to be indemnified by the franchisee for any conduct in the business, and that your employees and all these other people are indemnified for those kind of breaches, are just not really going to cut it anymore. And the ACCC has been very clear on that. There are ways of providing mutual liability and indemnity clauses. There are ways of, maneuvering those clauses to make them less intense for a franchisee. But obviously, there is that risk that we do need to, if we're not removing them from the contract, we're at least modifying them to make them more reasonable. And then one final one is restraints of trade. I would say that's quite a clear one that comes up a lot, restraints being completely unreasonable, and there's been also some case law around that as well. Okay, so we've actually got to wrap up. I see that there's a couple of questions that we didn't get to answer. So please feel free to reach out to us about how we can answer those for you. We'd be happy to jump on an additional, chat with you so that we can try and discuss those. And feel free to book a consultation. We can chat that through. Otherwise, that's all we've got time for. I'm really sorry if we haven't answered your question. If you submit your details at the end of the survey, we can answer that question that we didn't answer, and we can, talk more about how membership may be able to help you. And while this is a free webinar, we really value your feedback. So please take the time to just spend 30 seconds at the end of this survey to provide us with your feedback so that we can improve this experience and make it better for everybody involved. But otherwise, thank you so much for joining us.